All right, so welcome to the Stock and Profit podcast. It's been a while, and yeah, it's we're here, and it's going to be a new dawn, I would say. Okay, so today I want to talk about the power of discipline for traders, right? Now, this is something that if you're into trading, you understand why this is super important as a trader. Being disciplined is not something that just comes, that comes easy to a lot of traders, and it's really important to understand the different components, all the different things that you need to do to stay disciplined as a trader. So the first thing I want to talk about is consistency. Now, a disciplined trader follows a trading plan that outlines their entry and their exit criteria, right? Risk management strategies and overall trading approach. Now, this plan helps ensures consistency in your trading decisions, which can lead to more predictable results over time. Okay, because what you discover with a lot of traders is, and it also happened with me. Okay, when I started trading, the inconsistency of my result, I will make a lot of profit, and then what's going to happen is that in between profits, I'm going to make a lot of decisions that are not incongruent with my trading plan. And when I make a profit again, all I'm doing is trying to recoup all the losses I've taken that I shouldn't have taken if I was disciplined. Okay, and that is why consistency, it's super important. Consistency of following your trading plan again and again and again and again. Now, for example, a beginner trader may develop a simple trading plan, which is just simple and basic, and it includes just a few, technical indicators or technical analytical tools to look at, while a professional trader may have a more complex, incorporate so many things, incorporate fundamental analysis, incorporate, different things, risk management techniques, and all of that, that a beginner trader may not even understand as a beginner trader. Okay, but you just have to stay consistent with whatever it is that you've tested and works for you. So consistency is important. Consistency of following your trading plan. Now, the second thing I want to talk about is risk management. Now, risk management is essential for effective, trading, right? So, if you don't have a risk management plan in place, you simply just be all over the place. Today you risk 0.5%, tomorrow you risk 0.25%, next tomorrow you risk 1%, and then you're just all over the place. You're not consistent with your actions and your risk in the market. Now, discipline is essential for effective risk management. Okay. Now, what this means is that you have a solid understanding of risk and reward. So, if you're risking 1%, you're looking forward to make 5%, or 1 to 5. Or if you're risking 0.5%, you're looking forward to make 2.5%. Now, it has to be consistent. Okay, and you must understand what you're risking. Now, there are traders who say, okay, I'm risking 20 pips, 5 pips, 10 pips. But for me, I believe that makes no sense to me. What is most important for me is how much am I risking in this trade? Am I risking 2%? Am I risking 1%? Am I risking 0.425%? I need to know what percentage of my account I'm risking. And that is how I believe you can stay consistent with your risk management. You need to know what percentage are you risking. And then the third thing I want to talk about is your emotions. Now, after you're done mastering technical analysis, you even know the fundamentals to look out for and all of those things, what you're now going to deal with is your emotions, the anger, the fear, the impatience, and so many things you have to deal with. And that is why you have to understand that keeping your emotions in check is foundational to staying disciplined as a trader. Okay, now fear, greed, and impulsivity can lead to poor decision making and trading mistakes. For example, you take losses upon losses upon losses. What's going to happen next? You're afraid of taking the next loss, and then because of that, you're afraid of taking trades. Or maybe you took losses, and then now you want to revenge trade. You enter the market when the market is not optimal, when the conditions are not optimal. Okay, now you have to learn how to deal with your emotions. Go find another hobby outside of trading. If you've taken some trades and you took some losses, then go do something else. And you should have, okay, in terms of your risk management plan, you should have, okay, the number of losses you can take in a day. So if you take 2 losses in a day, that is it. You close that. That is all. Okay, you go do something else. All right, and you just don't have to understand that there will always be opportunities in the market. So if you allow your emotions take the better part, the best part of you, the better part of you, then you're going to be taking a lot of losses. Not that you don't know what you're doing, but because you don't have your emotions in check. And when you make profits, you're only covering mistakes that you shouldn't have made. The fourth thing I want to talk about is adaptability. Now, discipline allows traders to adapt to changing market conditions. A disciplined trader will stick to their trading plan, but also be willing to adjust if necessary to reflect changing market conditions. If you had a long and then all of a sudden you're seeing that from all indications the market is changing from the long bias to short bias, what do? You adapt. You simply switch. Okay, so you're not rigid. Okay, because you, of course, it should fit your trading plan, not just that because it's going bullish you buy bullish, because it's going bearish you sell bearish. No, it has to still fit your trading plan, but you need to be able to adapt with the changing market condition. And then the last thing I want to talk about is accountability. Now, discipline requires traders to take responsibility for their actions. A disciplined trader would always take ownership of their trades, whether they're profitable or not, and will learn from their mistakes to improve their future performance. Okay? While an indisciplined trader, or maybe a novice trader, I would say, would always want to blame somebody for their mistakes. Oh, it was a broker. Of course, there are bad actors. There are brokers who will just slip you, and for whatever reason, okay? For your selfish reasons, of course. But you have to take responsibility for your own growth and development. Of course, the recent issue with prop firms, my Forex funds, where the CEO was found to have been communicating with a fellow colleague and he was telling the employee or someone, that hey, sleep them to hell. Okay, so you can have bad actors like that, and Casimir, whatever his name is, that is not, um, that is still not a reason for you to generally just throw blame on others when for example your trade setup does not work or whatever reason. Okay, so these things happen, but at the same time you can still succeed if you take accountability. Okay, now you have, for example, beginner traders most of the time who will blame market conditions or blame external factors for your losses. On the flip side, professional traders would always approach the market in an analytical way. So if I took a loss, I would analyze the trade technically and say, okay, why did I take this? And take all of those lessons and integrate it back into my strategy. And that is how to stay accountable. Now, in conclusion, discipline is a critical factor for traders at all levels of experience. It helps ensure consistency, effective risk management, emotional control, adaptability, and accountability. Now, whether you're a beginner trader just starting out, or a seasoned professional, cultivating discipline in your trading approach can help you achieve long-term success in the financial markets. Okay, so that is it. So that is it on the power of discipline for a trader. I want to believe you've been able to pick a thing or two from this. So I'll be calling it a wrap here, and I look forward to sharing more with you on the next episode. Stay stuck in profit. Bye for now.